Our view is it'll be volatile because it's plugged into the entire crypto market and it's new, but it's going up forever.
Unfortunately, it's a pyramid scheme that has a core of true believers and a core of people who are really fascinated by a technology.
So my guess is by that time we'll start to be putting property on blockchain. So blockchain is not like an asset anymore. It is everything. We need to think of it differently. In the traditional securities world, it's really straightforward. There's US treasuries. Let's call Bitcoin that, the safest of all assets. Then what is the next safest? European government bonds, maybe? Okay, fine. Let's call that Ethereum. Okay, what are these other ones that kind of look like Ethereum, but are faster or better, i.e. may give you different features and benefits, but are riskier? Well, that could be Italian government bonds, or it could be something else. All you're doing is moving out of the risk curve and you're having trade-offs. Bitcoin's trade-off is security, is paramount, and its trade-off is speed. Now with others, Ethereum had the smart contract, which was its killer app. It's a victim of its own success, so costs are rising and it's not as fast as some of the applications need to be. So then Solana comes along, or Luna, and they're all trading off centralization, decentralization, speed and cost. And that is very normal. Much like when we buy a car, we'll trade off those things. What do we want to pay for? What can we afford to pay for? What features and benefits do we want? So what you're doing is just wedging more parts of the pie in there as new high quality protocols launch. And it's only attracting more people because right now the securities industry can't use the Bitcoin blockchain and they can't really use Ethereum. Could they use a layer 2? Maybe. Not really suitable. So they're waiting for what is the blockchain that works for them. As soon as you start solving different problems with different blockchains, you bring in more and more people into the space. You know, I was just having a conversation with Coy Sheffield from Visa, you know, how they're approaching the space, what blockchains work for them. It's different than what works for somebody who just wants to store an asset like Bitcoin. So that they're just all really different things that solve uniquely different problems. And a bunch of them will never get network effects because they don't solve a problem. It's same as any other startup. You know, I just think of it as that. At this point in the cycle, if you're an investor and not approaching it from the philosophical point of view of Bitcoin, but from an investment point of view, you want to own less Bitcoin at this point in the cycle. It's always worked to own less Bitcoin, and that's fine. People seem to take that as like some huge judgment against Bitcoin, or no, I'm trying to make money. Simple as that. Because my background was finance, I knew that the securities lending industry, the derivative industry, everything was going to go on blockchain. That was absolutely clear the moment I saw it. And that's not trying to brag. It's just that's finance, right? I kind of knew the plumbing because we'd all had to become plumbing experts in 2008. So DeFi wasn't a surprise. It just suddenly came out of nowhere. And what was interesting is how fast it grew. Now, DeFi is still pretty unapproachable, even to somebody like me. You just don't know what risk you're taking. You don't know, which one of the algorithms is going to succeed or fail. It's mass experimentation. It's really exciting. It's incredible. And it's really needed because if you remember what I was talking about in March and April and May 2020 was we need a yield curve for crypto, right? We need to have a long-term interest rate to allow us to store our money and be able to price everything off it. And it didn't have one. Then DeFi comes and we get one. It's mainly still in the shorter term, but staking is actually done longer term for different chains. It was a shock how fast it's come. It's still not fully developed. We're still developing only certain parts of it. We haven't even really got to the insurance industry, and that's coming onto this too. So how do I think about this and Bitcoin? Bitcoin has the highest probability of being the base layer of value. People get so confused over all of this. They think everything's in competition. They're not. Everything is accretive to a space that's going up 200x from here. And there's plenty of room for everybody. And all of these will go up in value. People say, well, there's all these ETH competitors like Solana. Great. They're all going to go up in value. Will ETH be as dominant as it is today? No. Will Bitcoin be as dominant as it is today? No. Will Bitcoin be challenged in its role? Highly unlikely. Will ETH be fully challenged? Don't know, possible, because it's a more open platform. Bitcoin has been really slow in the DeFi evolution. But of course, if it's a base asset, it'll be built on in the way that we understand it to be. The Bitcoin blockchain is highly unlikely to be used for the settlement and custody of securities. Just it's not an effective use of that blockchain. But to have it as the store of value, savings, whatever you think about, and then to build DeFi on top of that, if I want to have my Bitcoin that I want to hold for 10 years, I'd love to get a yield on that for 10 years in a way that is secure and understandable. We haven't got there yet with Bitcoin. I kind of think that, and then I put the chart of Bitcoin 2013 against Bitcoin now, and they're exactly the same pattern. It's a nice narrative, but it seems to be following the same kind of price action. Let's see how it finishes the year. We've all got big expectations, and we're either going to end up with egg on our faces and it's a slow grind higher, and we're all going to be sitting there thinking, okay, well, what change? And your thesis will be right. It's getting much harder. This end of year is probably the easiest phase we've got. And then after that, it's like the fog comes over, because I can't get a clear probability. We have a bunch of people who say the cycle's over because everyone expects December to be the end of the cycle. And then all the institutions come in January because they've just been given new P&Ls and balance sheets, the hedge funds, everybody else, and new allocations. And that creates yet another upcycle that nobody's expecting. It's kind of what I think, but who knows? It's going to be much larger than the existing system because it's so much more than just finance. This is the culture as an investment. People haven't got their heads around how big this NFT and social tokens thing. I keep bleating on about it. It's much bigger than anybody yet understands. This whole digital asset space, if we go 15 years, is probably 300 plus trillion, maybe even 500 trillion. Sounds a ridiculous number, but it's not, because the equities business is 200 trillion. Well, how much of that's going to be on blockchain? All of it. The bond industry, how much of that's going to be in blockchain? Well, the Europeans are already testing it. France have been testing it, and the European Central, not the European Central Bank, whichever one it is, have been testing it. So all bonds are going to be on blockchain. My guess is by that time, we'll start to be putting property on blockchain. So blockchain is not like an asset anymore. It is everything. So the answer to this is nobody knows, and anybody who thinks they do is lying. Is there a probability of it? Yes. Adverse to the idea, I can hold the two ideas in my head that we can have hyper Bitcoinization, or we don't. We have a digital currency world. We get the gift of Bitcoin for us to use as an independent money system. I get that too. I don't have a problem not knowing the answer, and I don't need to ascribe to an answer. And the answer is really simple: network adoption. There is only one thing you need to know. Is Bitcoin being adopted, and at what rate, and when does it get to saturation point that everybody in the world owns it? And then it's the number of use cases that it has.